Hi everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate filings. Today we're diving into SenesTech's latest proxy statement. It's a document that's supposed to be all about making decisions for the company's future, but sometimes it feels more like trying to understand what rats are planning in a maze. Get it? Because that's their business. Let's unpack this. This proxy statement outlines several key proposals SenesTech wants its stockholders to vote on at their annual meeting in June 2025. We're talking about electing directors, executive pay, stock plans, and even a potential reverse stock split. Buckle up, it's a bumpy ride. First up, the election of directors. Joel Freund and Matthew Sott are nominated to serve as Class 3 directors for another 3 years. A director serves until their successor is elected, unless they are removed, resign, or can't serve. It's like a game of musical chairs, but with much higher stakes. Let's take a quick look at the nominees. Joel Freund is currently the president and CEO of SenesTech. Before SenesTech, he was in pest control and other management roles. His experience in the pest control industry and managing companies makes him qualified to serve on the board. Matthew Sott is the other nominee. He is the Chief Financial Officer of Cadrenal Therapeutics. He has experience as a Chief Financial Officer and Director for other public companies. His financial experience and knowledge make him qualified to serve as a member of the board. Moving on to corporate governance, the board has determined that Jamie Bechtel and Phil Grandinetti, Jake Leach, Joshua Moss, and Matthew Sott are independent directors. The board believes having a majority of independent directors is important for good governance. Now let's talk money director compensation. The following table shows the compensation for non-employee directors for the year ended December 31, 2024. Let's check out Jamie Bechtel, the chair of the board. She received about $74,500 in cash and option awards, valued at around $32,776, bringing her total to $107 in cash, and option awards of $32,076, for a total of $92,276. Understanding these numbers is important to help make sure the board's interests align with the stockholders. Next, the juiciest part, executive compensation. Here we have a table for our named executive officers. Joel Freund, President and CEO, made $575,809 in 2024. Thomas Chesterman, Executive Vice President and CFO, made $364,174,174. $78 base salary plus some bonus and option awards. Now let's see their outstanding equity awards. Thomas Chesterman has options from as far back as 2015 and 2020, so he's been with the company for a while. This incentivizes them to perform well, aligning their interests with the shareholders. Here's where things get interesting: pay versus performance. This table compares executive compensation with company performance. In 2024, Joel Freund's compensation was $575,809, but the value of an initial $100 investment increased to only $20. It raises a question of whether executive pay is truly aligned with company performance. The company itself states that compensation actually paid to our with the average compensation actually paid to our non-PO NEOs are not directly correlated with total shareholder return, and that they have not historically looked to net income loss. As a guide to measure performance for our executive pay is truly aligned with company performance. The company itself states that compensation actually paid to our non-PEO NEOs are not directly correlated with total shareholder return, and that they have not historically looked to net income loss. As a guide to measure performance for our executive officers, a question of whether executive pay is truly aligned with company performance. For our executive officers, who owns the most shares? According to this table, Lynn Global Fund 2 LP owns about 9.999%, and PFS CapMGT Co. owns about 9.522%. These are the big players we should watch. The company wants to increase the number of shares available under their 2018 equity incentive plan by 900,000 shares. This will allow them to grant more stock options and other equity awards to employees, officers, directors, and consultants. As of April 10, 2025, only 32 shares are remaining available for grant, which the company sees as insufficient. Time for the accountants M&K. CPAS PLLC has been their auditor since 2014. This proposal asks stockholders to ratify their appointment for the next fiscal year. The company has to make sure it has a good auditor so its numbers and reports are correct. In 2024, audit fees totaled $64,635 and audit related fees were $23 and audit related fees were $23,175 for total fees of $87,810. This is pretty standard for a company this size. Here's where it gets a bit complicated. This proposal is about approving the issuance of shares related to some warrants. The company issued warrants to investors in exchange for exercising existing warrants. They need stockholder approval to issue the shares underlying these new warrants to comply with NASDAQ listing rules. They made this agreement to make sure the company continues to comply with NASDAQ. Back on March 31, 2025, the company had approximately $1.6 million in cash. That's not a lot, which is why they needed to do a private placement. At the time of the private placement, the board considered other alternatives that didn't end up panning out. Now for the reverse stock split. The company wants the option to combine its outstanding shares by a ratio of 1-for-2 to 1-for-12. If the price drops below $1, this is what companies do to artificially increase its price. This is what companies do to avoid being delisted from NASDAQ. However, there's no guarantee this will work, and in the past, this action has failed them. That's all the proposals in this proxy statement. Let's zoom out and think about the big picture. SenesTech has some strengths. They have a unique product that is a non-lethal form of pest control that is aligned to the new environmental and sustainability standards. However, the company's financials raise some concerns, such as consistent losses and the need for additional funding. With just about $1 million in hand, they might need to raise money again, and stockholders are very aware of that. Also, NASDAQ is threatening to kick them out if the price is too low. The company might need to find other revenue or sell more assets to continue doing what they are doing. All of these problems could scare investors away. As much as I like the product and the idea, the company needs to get profitable. First, for NASDAQ is threatening to kick them out if the price is too low. The company might need to find other revenue or sell more assets to continue doing what they are doing. All of these problems could scare investors away. As much as I like the product and the idea, the company needs to get profitable first for anyone to want to invest. Thanks for watching Corporate Decoder. If you found this helpful, please like, comment, and subscribe.